Okay, hello again. Joe Tringali coming to you from the beacon of Club Success. The new name for this program, brought to you by the Academy of Yachting. But as I explained last week, the things that we talk about here apply to all clubs. So whether you have a yacht club, a motor club, an aero club, whatever it is, if it's a club, you need to know all this stuff, okay? Last week I told you we were going to talk about taxes. We didn't finish. We're going to talk about taxes again today. I also warned you that I am not a tax lawyer. I am a constitutional lawyer. I am familiar with taxes, but as far as I'm concerned, if you have a tax problem, you go to a tax lawyer, you go to a CPA, or better yet, you go to an enrolled agent. On that note, last week we were talking about 501c7 of the Internal Revenue Code, and I was telling you that if you are a 501c7 corporation, which means your business is collecting dues, well, you don't pay income tax. And in passing, I explained the 15% rule and the 35% rule. And I think I said, well, if less than 15%, if more than 15% of your income comes from non-members, you lose your tax exemption. If it's less than that, I think I said you don't have to declare that income. Go see your enrolled agent about that, okay? Because I'll be talking to mine next week to double check on that. You don't have to pay income on that income. You don't have to pay income tax on that income. Whether or not you declare it, that's up to the person who does your tax return, okay? So again, we all have a specialty. And my job here at the beacon of Club Success is to warn you where the shoals and the rocks are. You got airport beacon, tells you where the landing strip is. You have the runway in sight. The beacon helps you to know where you are, but make sure that you know what you're doing when you're doing it, okay? The fact that you have a beacon does not mean that you can fly an airplane, right? Okay. Now, we're taking our information from this handy-dandy book, wonderful little book. I wrote it. It's called You, Your Club, and the Law. And I highly recommend it. And I highly recommend it not because, Joe is, shilling for books. It is a very good book that covers pretty much everything you need to know about clubs and liability of officers and discrimination, whether you are or are not allowed to select members, what is the rationale for those things. So it's a good book. For 20 bucks, you go on calkinsharbor.com, CALKINS, harbor.com. There are a couple other books there that you might be interested in. I highly recommend it, okay? Now, that being said, let's move on to two of the, this is just always a problem, okay? One of the problems is reciprocity income, and I am going to be stepping on a lot of toes out there, and I apologize to you folks, but here's the word, okay? Not from me, it's from the Commissioner of the Internal Revenue Service. We talked about the 15% rule, and if more than 15% of your income comes from non-members, etc., okay? There is this superstition going on out there, particularly among yacht clubs, also among social clubs, that it doesn't apply to people who come from clubs with whom you have reciprocity. because after all, they're our members too, just like they're your members and your members are our members, and we're all, yeah. No, okay. Um, Revenue Ruling 79-145 added, on the other hand, amounts paid to a social club by visiting members of another social club are amounts paid by non-members, even though both clubs are of like nature and the amounts paid are for goods, facilities, or services provided by such social club under a reciprocal arrangement with such other social club. Now that ruling goes back to 1979. You know, it's a long time ago. However, it was reissued on January 10th, 2008. Guess what? It hasn't changed. Does that mean you automatically pull out of all these agreements that you have with other clubs? I'm not telling you to do that. I'm just telling you, you need to be careful. You need to discuss this with your enrolled agent, with your CPA, with your tax lawyer, whatever. Because remember, if you lose your 501c7 exemption, which means you don't pay income tax, you don't just lose it for that percentage, you lose it for everything. You go back to being a business corporation, just like every other business corporation. And that means you pay income tax on everything. So be careful. Be careful with that reciprocity language. Doesn't always work. In fact, I would say it doesn't work. Okay? Gosh, my timer tells me I've got 3 minutes left. So, let's touch on 501c3. This is the Holy Grail, right? Everybody knows 501c3. Everybody wants to know it, okay? Corporations and any other community trust fund or foundation organized and operated exclusively for religious, charitable, scientific testing, for public safety, literary or educational purposes, etc., etc. Okay? Those companies, those corporations do not pay income tax. And, here it comes, the money that you pay to the corporation is deductible to you as a charitable deduction. Now, there are some very large boating organizations, United States Power Squadrons, my flag back there, former rear commander, is a legitimate 501c3 corporation, has been for years and years and years. They primarily deal with boating education and boating safety. Sometimes to the extent that yacht club people don't really like them too much because they say those people don't have any fun. Well, if you're going to have fun, you're not going to fit under 501c3, which means, okay, the world has not come to an end, but your members do not get to deduct the dues that they pay to you. You're still exempt from paying income taxes, but the individual member does not get the benefit of a charitable deduction. Now, how far can you go? You know, how high is up? How deep is the ocean? I don't know. But you're going to get to a point where if you're having a raft up and picnic every week, and you're having a class for small boat sailors for kids, you know, youth sailing program, and you're doing that once every 3 months for 1 day, you're probably not going to be able to keep your 501c3 status, okay? Now, we're at 9:55, so I'm going to tell you this. The other thing you cannot do as a 501c3 is attempt to influence legislation. And next time in Taxes Part 3, we're going to talk about that, okay? How you lose that exemption if you somehow manage to get it in the first place. For now, it's Joe Tringali coming to you with the beacon of club success and urging you to subscribe to this channel and stay tuned. Thanks a lot.